What's up everyone, it's Cody with Money Investing. So thank you so much for joining in. Just give me a thumbs up if everything is working accordingly. So if you guys can hear me, if you guys can see me, and if you are all set, just let me know in the live chat and we should be good to go. So thank you so much for joining in. Ryan, thank you. Alonzo, welcome on board. David, welcome from Virginia. Xu Ching On, thank you so much for joining. Genji, thank you so much for joining as well. The markets are green. So you got the NASDAQ a little bit higher over 38 basis points, and we got the S&P up over 39 basis points, and the Dow also pushing higher up over 48 basis points. So we are certainly in the green right now. Pre-market, there are a few things that I want to go over before the market opens. Bitcoin, unfortunately, is starting to pull back a little bit, down almost 1%. Just trading under 46,000 now, and Ethereum also now trading under 3,400. Just down a little bit over 1.6%, with the volatility coming down very aggressively. So the VIX is down a little bit over 7%, and we're trading just under 17.5, and the VXN hasn't opened yet. But a lot of the stocks are in the green pre-market. Tesla is up a little bit over 63 basis points. Amazon also probably up over 60 basis points here, just about 0.5%. Apple was up last time I checked, up over 0.5% as well. We got AMD. That's up a little bit over 72 basis points, kind of recovering some of the losses from the last couple of days. Nvidia, let's take a quick look. It's also up over 80 basis points. Upstart, let's talk about that one really quickly. Slightly down about 0.5%. But this right here are going to be some of the things that I wanted to go over. So Biden and Chinese President Xi on Friday spoke for the first time since February as tensions between the world's two largest economies kind of simmer. This was a 19-minute call where they talked about cooperation between the two countries on climate, the pandemic prevention, economic recovery, and major international and regional issues as well. This right here is the producer price index. So today we had the actual one of the inflation reports come out, which is the PPI numbers. So it's mostly on the manufacturing side, the producer side, and what those costs look like for them. And the PPI month over month actually saw an increase of 70 basis points. Consensus was 60 basis points, so it's 10 basis points slightly higher than the consensus range, but still within that consensus range, between 40 and 80 basis points. Year over year, we're now at 8.3%. So that's a big jump from 7.8% the prior month. So we're seeing that increase of about 50 basis points, 0.5 percentage point there. This right here is going to be, let's take a look. Excluding food and energy, month over month, we saw a 60 basis point increase, so that's much lower than the prior 1%. So still slightly higher than the consensus range. Year over year, we're seeing that increase from 6.2% to 7.3%, so it's a bit of an increase there. And this right here, excluding food, energy, trade services, year over year, we saw 6.1 to 6.3%. So August wholesale prices rise 8.3% on annual basis, biggest advance on record. So that's the 8.3% that they're referring to over here. PPI, final demand year over year, 8.3 right there, the actual number. And reading further, you'll notice that prices that producers get for final demand of goods and services surged in August at their highest annual rate since at least 2010. And the producer price index accelerated 70 basis points for the month, so that is going to be that 70 basis points at the very top. That's the month over month change, above the 0.6% that was the estimate. On a year over year basis, the gauge rose 8.3%, which is the biggest annual increase since records have been kept going back to November 2010. And the data comes amid heightened inflation fears fed by supply chain issues, a shortage of various consumer and producer goods, and heightened demand related to the pandemic as well. And the Fed officials expect inflationary pressures to ease throughout the year, but they have remained stubbornly persistent, inflation in general. Excluding food and energy, trade services, final demand prices rose 0.3% from the month, below the 0.5% estimate. Still, that left core PPI up 6.3% from a year ago. So that's going to be all the way down here, 6.3% from a year ago. And also the largest record increase for data on going back in August 2014. But the biggest thing to note here is that a lot of the producer price index increases are being absorbed by the companies. And even though we may see some of the margins getting smaller or lower, they are not getting passed on directly to the consumer, right? So Tuesday, we got the consumer price index. That's going to be next week. That's a much important metric that the market's going to look for. And I will be live to cover that. We usually get a very muted reaction for this number because it's the producer side, and usually these costs do get absorbed by the manufacturers and the companies in general, and they don't get passed on to the consumers. But we will find out about that next week. Affirm Holdings, AFRM, it's been part of our Discord. We've been talking about it since the morning, so it's soared over 22% in pre-market as a buy now, pay later company. Revenue easily topped estimates, active merchant numbers more than quintupled, and a firm issued a positive outlook as well. So let's take a quick look on where it's trading. I flipped that previous resistance into a new support, so $103.57 level is now going to start acting as a new support here for the company. It's up over 21%, so a very strong move to the upside. And the next target or that next resistance to watch is going to be that $138 a share. Just a quick note here that there is going to be a small gap for us to fill, because right now we're just going to open at just over $111. So this right here is going to be a gap, a potential gap for us to fill if we do get that downside for this company. And there's going to be another gap all the way down here which we haven't quite filled. So you'll notice that we gapped up, then we came back down to kind of started filling that gap in before pushing higher. So I bought that's unfortunate. So I bought puts on a firm for earnings. That's unfortunate. I am sorry for that trade, but definitely strong breakout here over $103.57. Next target to watch is going to be 138. And this right here, a couple gaps to watch for this company, because we've just been gapping up, and then the rally continues for this company as well. All right, let's talk about Wells Fargo. So Wells Fargo was fined $250 million by regulators who said the bank has not made sufficient progress in solving ongoing issues in its mortgage businesses. And regulators had first identified those issues back in 2018. The stock was still up. This company has been selling off because of the regulatory issues, right? So it's up a little bit over 1.5%. But this bank has obviously been selling off since $51. It was down a little bit over 15%, 16%. But it's now starting to consolidate sideways. So 41.65-ish level is what I have on the chart as the next support, all the way as low as $38. Previous support that we have validated in the past. But the 200 SMA, I do expect that to also get aligned with 41.65 levels. The dividend yield is decent, so 1.83% is good for the company. So if you are someone who's interested in that, those right there are going to be some levels to watch. Dave & Buster's, so they also rallied over 7.9% pre-market. Let's take a quick look on where they are now. So they're up over 10% now, so breaking out over the moving averages, really starting to push to the upside here, and it has been selling off from $51. It was down at one point over 40%, then we were down over 31%, and this right here, strong move to the upside on earnings, which basically came in at $1.07 per share in EPS, well above the 58-cent consensus estimate. And the restaurant and the arcade chain's revenue beat Wall Street forecast, and Dave & Buster's said it continues to see signs of recovery in its business, and it expects that to continue, bringing any significant pandemic-related downturn. So it's a strong breakout here. Still not quite the highs from the pre-pandemic levels. So back in February 2020, we were trading at well over $47. So that right there, this is like a pure recovery play, right? So the more people kind of start going back into these chains, the better the earnings, the better the revenue outlook is going to look like for this company. So this is like as pure recovery as it gets from this pandemic. So that right there is going to be that next resistance. It kind of feels like it's a strong breakout on a bullish divergence too, because if you look at the RSI, you'll notice that this right here was a strong relative strength index bullish move for the RSI, while the actual price continued to make these lower highs. So there was like a divergence or a positive divergence, and now we're starting to see that move to the upside. So I wouldn't be surprised if this continues for Dave & Buster's for us to see a retest of $49 a share, and that could be a jump of 24%, considering this bullish divergence as well. Alright, so last but not least, let's see. Take-Two Interactive is delaying new versions of its GTA video game by 4 months, saying it wants additional time to further polish the final products. The Take-Two maintained its prior full-year outlook, and the shares fell 1.9%. So this is a stock that is obviously on my watch list very, very closely. I'm keeping a close eye on this, and 151-ish level is going to be the price that I'm going to personally add more shares at. So there's a video coming out, fundamental analysis on this company over the weekend, kind of going over all their different titles or all their different brands. But of course, GTA, I don't know if there's GTA 6 or if there's different versions of the GTA coming out, but I'm pretty sure there's been rumors about the GTA 6 coming out in either 2023 or 2025. So they've got over 61 titles getting released between 2022 and 2024. So in the next couple years is 61 titles, both on mobile and consoles and PCs as well. So, and I'll go over that in more detail over the weekend in the fundamental analysis. But GTA 6, I think, is going to be the biggest revenue driver for the company once that game gets out. but we don't really quite have a clear guidance as to when that's going to happen, because the thing with these companies that are in this sort of development of games and interactive like sort of entertainment is that they don't want to put a definitive timeline on anything, right? Because things change and things get moved around. New games get added on, old games get dropped off, so they don't want to actually tell us exactly when that's going to happen, because if they miss those estimates, the stock is going to drop. That's why they give us like a tentative date, but really looking forward to that game, because it's literally one of the games that I've played the most is GTA 5. Yeah, so I thought that game kept getting delayed, so it's still potentially getting delayed, but we know it's coming, right? It's not, it's like we know it's gonna be there eventually, and that's gonna be a huge revenue driver. I mean, GTA 5 was the best-selling game. I think it sold like 250. I think it was 350 million copies sold for that game. So I mean, that was just like more than FIFA, more than Call of Duty. And it's just one of the games that I've loved and really enjoy playing too. So 151 support I'm watching for this company, and now we're going to break down some of the individual companies. And before we do that, just a quick update on the markets for everybody joining in. We got the markets still up. The Nasdaq is up over 40 basis points, the SPY up over 40, the Dow is also up over 48, with Bitcoin prices pulling back a little bit, and VIX is also coming down drastically, down over 7%. All right, so let's take a look at Tesla first. So Tesla. We got Tesla, yesterday it was up just pretty much flat, 760 right now, so up over 60 basis points, $780. I mean, you guys already know that right there is going to be the next level that I'm watching very closely for Tesla at $780, and 750 is going to be that support level to keep in mind. I mean, yesterday we held up 751, the day before we ended up closing over 750, the day before that we ended up closing over 750. So the last 3 days we've done a really good job kind of closing above $750. So that is a very strong support for Tesla. And again, my next target is again reiterated at close to 780. That's the level that I'm eyeing on for Tesla. It's going to be aligned inside this higher highs and higher lows. But if we do see any type of a pullback or a correction here, the level to watch is a higher low, or the ascending support is going to be this right here. So it's going to be sitting roughly at $700. And the good thing is that we got both the moving averages now perfectly aligned at 696, 688, right? So kind of like together, the 50 EMA and the 200 SMA, they're just like very, very aligned. They're just moving together. So that's good. And the more they move together, the more support we're going to find for Tesla if we do see any type of a pullback. Those moving averages, in my opinion, have done a really good job holding Tesla as a support. So if you do see any type of a pullback, then I wouldn't be surprised to see a retest of that level. All right, so that's that. Let's take a look at Pinterest. So Pinterest is going to be the support that I'm watching for Pinterest is going to be at closer to $54. And yesterday, you'll notice that we perfectly got a validation of that support. So in the past, coming in from like May 13th, we saw a perfect validation of that support before Pinterest rallied over 52%. And right now we're just sitting above that level. This is a stock that is down substantially from its all-time highs, over 38%. I want to be very clear that this is not a company that's undervalued by any means, but it has a lot of potential for growth, right? So they are going to be reporting their earnings soon. So earnings are coming up in November. I'm expecting revenue growth double digits, EPS growth double digits, if not triple digits for the company. And in my opinion, just considering where it is from its all-time highs, it's okay for myself to at least start a small position here, just given where it is. And valuation wise, I want to be very clear, this comes with risk, because forward P, I think it's sitting at roughly under 40, and the price of sales is still like in the 10 and 12 levels. So again, it's considered as like a social media software IT company. So that's that, and the margins are really high for this company as well. So $54 is going to be that next support level, and they actually reported some really good earnings right after we saw the sell-off over 18%. They actually reported incredible earnings, revenue growth, EPS growth, but the user growth kind of slowed down, which is very normal because of the pandemic and year-over-year comps. But right now we're just sitting above that support of $54, and that next resistance to watch is going to be that $61 a share, kind of aligned with those moving averages. And then we also got this huge gap for us to fill moving forward. All right, so let's take a look at INMD. So InMode, this is on my watch list for some more research and analysis, up over 3% on the day today. Pre-market so far, it was up over 2% yesterday, but I really like the pattern for this company. It's just been on a complete rally here, almost up 1,000%. So again, congratulations to anyone who's been trading or investing in this. Strong revenue growth, strong margin growth. It's got a really, really good balance sheet. So I'm starting to really like InMode as a company as I do more research. But again, it really begs the question what the future looks like after this 1,000% growth, right? So statistically speaking, we're trading at just about 44 times earnings and 19 times sales. So that price to sales multiple is rich. 20 times sales is incredibly rich multiple. 44 times is not quite. I mean, it's rich from a traditional perspective, but you have to understand the market that we're in. The market that we are in, this is reasonable. It's crazy because if you were to think about it, 8 years ago, 5 years ago, 44p would have been very overvalued. But the market that we're in, which is already overvalued, 44 seems reasonable. And that's how perspective works, right? We start to justify these higher PEs because of the overall market, which I don't want to do unless we're okay with taking on that additional risk. So I want you guys to understand that. So 44 is high, 20 times price to sales is also high, but the pattern has just been really, really amazing. This is what I really love. I mean, if I were to invest in any company based on just technicals, this is what I would look for right here. This is an ascending pattern, higher highs, higher lows. Absolutely, you don't have to do any work. Literally don't have to do any work. No analysis, nothing. You just buy and hold it. All right, so that's that, and let's take a look at, NEO. All right, let's talk about NEO, a couple questions about NEO. So NEO is up just about 90 basis points pre-market, 30 at 50, so we seem to be kind of above that level. So this right here is gonna be either that support or that resistance, depending on where we trade on the day. So on the day, I would ideally want NEO to kind of hold above 30 at 50. If it can do that, that's a good support. And even the 300 SMA, so that's this pink line at the very bottom. You guys see on the chart, so we've been perfectly validating that level once, twice, 3 times. And we have been validating that support. So if you do end up closing above 30 at 50, then there's a possible chance that we push higher back up to 41.50 and even retest that 50 EMA. So we got that rejection at that 50 EMA, then we gap down, and right now we're just stabilizing a little bit. So 30.50 near-term support level to watch for the company. So that right there is going to be the level to watch for NEO, and the resistance is going to stay put at close to $41.30. Miguel, Caddy, what do you do for a living? I analyze stocks. I love to research, and that's pretty much what I do, is just look at the markets, learn more about it. And again, learning every day. I obviously don't know everything, so pretty much learning and just taking as much information in as possible. And that's it, just analyzing the markets and stocks. Vertex is slightly up over 22 basis points. It's got a couple downgrades, which I can't make any sense of. Again, this kind of reminds me of a great company right now. It's trading at a very, very undervalued level, if you ask me. So again, this is my personal opinion here, that the 4 the price of sales, and just the business in general, the growth that we have seen is very strong for Vertex. So then I'm not sure why it's receiving a couple downgrades here lately. But Morgan Stanley, even though it downgraded it from a buy to a hold, they still have a price target of $202. That still represents an upside of close to, I think, 10 or 11% from where we are right now. So just about 9% from where we are. So continue to kind of accumulate more here, in my opinion. I am 186 is that next support. All the way was 163. And again, there's a video coming out this weekend on Vertex Pharmaceutical as well. Peyton, welcome on board. Thank you so much for joining. What are the advices that you do to grow a YouTube channel? Miguel, are you asking for me for advice, or so what are the advices that you do to grow a YouTube channel? Are you asking for like advice from me, or are you? I don't understand the question. If you feel free kind of elaborating, I'm more than happy to help. All right, so we're gonna go over the markets here. So we just got about 10 seconds left for the markets to open. We got the Nasdaq pumping a little bit pre-market. And we get the SPY also pushing higher, and so is the Dow Jones. Let's see. All right, the market is open. I'm going to switch over to the indexes now, and we'll set up our individual charts as well. So this right here is going to be the Nasdaq. So we should open here very soon. We're going to do SPX. All right, so this right here is going to be the Dow Jones. Thoughts on entering the Indian equity market? I will be doing a couple IPOs here. Very, very soon. Well, there's a company called Paytm. They're going to be doing their IPO very soon. There was also a company called Zomato. I don't know if you've heard of it, but it's kind of like the equivalent of DoorDash here in India. And they've been doing really well. But yeah, it's just about accessibility, right? I don't know how many people are going to have access to the Indian markets, but there's a couple of companies that I'm looking into very closely. But the problem is that these companies already get valued at significantly higher multiples. Like Zomato was trading at like over 30 or like 25 times sales already when it IPO'd. And then Paytm, I'm sure it's going to probably be like very similar, right? It's going to trade at a very, very significant multiple. In general, how to grow. Okay, Miguel. So if you are looking to start a YouTube channel, I would highly encourage you to do it something around that you're really passionate about, and just go all in on it, right? Just create content and just, because you're going to be doing this a lot. So you have to find something that you truly care about and you're truly passionate about, whatever that is. So that's the number one thing, is that you find something that you really like and enjoy doing, and just create content and just learn more about it, and just create as much content as possible. All right, let's take a look at our 4 split charts. We're gonna go over all those different companies here. All right, right here. The Nasdaq really pushing higher. We got a 4-day losing streak now starting to break here, with the Nasdaq, S&P, and the Dow all pumping on the day. We're gonna switch over to the 5-minute chart here. All right, let's do a poll here. I mean, this will be a little bit of a biased poll, but markets today, green or red? All right, just sent the poll out. So encourage you to start with Nifty 50 companies. Yeah, I'm definitely going to be doing that, probably like in 2022, thinking about it. But yeah, that's something definitely for the future. All right, so Tesla pulling back a little bit, and then we'll switch over to some of the other companies. Let's just take a look at Affirm here, AFRM. So Caddy, did you go over those Vertex questions yet? Which questions, Rita? Which questions are you talking about? Did you have like questions on Vertex? All right, so let's see. UiPath, please. All right, let's take a look at UiPath. We've gone over UiPath like so many times. I think it's now trading at very, very strong support level at closer to $55 or $54.90. I'm not sure if Kathy would have still buying the stock. I know that she was earlier. I could be mistaken, but let's see. Yeah, so I think the biggest reason for the drop has been the earnings, but this company remains a little bit richly traded in terms of the multiple. So right here, if you take a look at this, 40 times sales, again, a little bit of a rich valuation. So $55 is going to be that next resistance to watch for the company. Oh. So that right there is the level, and the support level is quite difficult to identify right now, just because we are trading at a 52-week low and pretty much the lowest point since the company has IPO'd. So $55, that next resistance to keep in mind for UiPath. So KRDO Leaps, thank you so much for that. I really, really appreciate it. Time to tag the market. I've been keeping a close eye on CBS. What are your thoughts? Let's take a quick look on CBS. And all right, so CBS looks like it's been on a strong uptrend recently. So after the sell-off that we saw from back in May, it sold off all the way down to $80, and since then it kind of feels like it's been nicely forming kind of like this higher high and higher low pattern. So it has been pushing up. So if it does come down to that 50 EMA or even that support at closer to $82, I think that could represent a decent opportunity to kind of get in, just considering this higher high and higher low pattern for CBS. So this right here, of course, was a sell-off over 12%, and now we're just validating a couple support levels at $80 all the way as low as $82. I mean, CBS over the long term, in my opinion, is a stable stock. It's done really well with the revenues. They've been very consistent with the revenues as well, and as well as the profit margins. So there's not going to be insane volatility, and it's got a 2.3% yield, right? So we got a dividend yield plus opportunity to capital appreciate. I think both of those are a very sweet deal for CBS if it does come down to some of those support levels, considering the valuation is reasonable. So $82 all the way as low as $80 are going to be two levels to watch. Wow, look at that long wick on the NASDAQ here. So 77% people say green and 23% mentioned red. So that's quite a tilted pull there. But NASDAQ really with that long wick. If you switch over to the actual 5-minute chart, you'll notice that we pumped the first 5 minutes and then we back down. Let's do for that for the S&P. S&P is still up a little bit. Dow Jones is also up over 172 points. And the NASDAQ is still up over 60, but starting to pull back a little bit. Affirm is pulling back. Seems like there is some profit taking for the company. Tesla pretty stable at 759, 760 levels. Let's take a look at Palantir here, and then we'll go over Apple all the way at the bottom here. So Apple, 155, still up over 75 basis points. Palantir also stabilizing a little bit. It's had a couple, not a couple, but like one really red day that we saw for Palantir. So you'll notice that this right here was a pretty brutal sell-off all the way down to that 200 SMA. Then we quickly rebounded back over 25.75. So this is going to be the next support level to keep in mind for Palantir. So 25.75, we're back over that support. Let's take a quick look on Moderna. So Moderna continues to push higher. It's good that we broke out over 410. So next resistance to keep in mind for this company is going to be right there at close to 495. And Moderna was actually one of the very few stocks that was green yesterday in the healthcare sector. And it was very, very green, right? Moderna and BioNTech, they were both really green. There is a plan from the Biden administration to cut down on some of the drug prices. That's why the entire healthcare sector was down, but Moderna and BioNTech still rallied. I mean, it was up, what, over 7% yesterday. And BNTX, what is the ticker symbol for that? Yep, this one, BNTX, was up also yesterday a little bit over 4.5% and still pushing higher, kind of validating that 50 EMA. So very, very strong move to the upside for both of these companies. And next target for Moderna, 495, support still stays put at 410, but this is a volatile stock, so I would be very careful with this one. Let's take a look at Intel and see how that stock is doing. It's up over 1.87%, so it's strong move to the upside here on the day. Let's see if there's any catalysts that are coming up. So alright, so Intel, nothing really that kind of stands out. These are all from September 8th, so a couple of days ago. But definitely pushing higher. I mean, this stock in general is undervalued. If you take a look at some of those traditional metrics, it's got a decent yield. Revenue's been very stable. Of course, they have declined a little bit in revenues and lost market share as well to AMD, Nvidia, and some of those sectors. But this remains undervalued at these prices. So right now we're just testing those moving averages, the 50 EMA and the SMA line. And if we do get that breakout, then I wouldn't be surprised for us to see a retest of $58. That's going to be the next level to watch. AMC is over $50. That is incredible. So AMC over $50. Let's go. That's absolutely amazing. So $50, we just have to hold above that level though. Just because we see that intraday breakout, it's important for AMC to break out and hold above that level as well, $50. And the volume needs to be strong. So volume for the last 3 days has been really good, but it's up another 4%. And 10 million shares already traded versus the average 10-day 90. Ideally, like to see over 100 plus volume in general, right? 100 plus would be really, really good for AMC, and if we can close above $50, that would be the best for AMC. And it's been a strong rally here from 28 to 50. That's been an 80% jump coming in from like the first week of August. So I'm just gonna bring this down slightly at close to $50.75 right there. So how does dividend work if you buy American stocks from another country? It just works as just as it would. Like if you have a brokerage account that that has access to U.S. stocks, you can simply buy stocks that pay out a dividend, and you'll just receive a cash payment. That's it, and you'll pay taxes on those, and that's pretty simple. So all right, so let's give us your daily OJ. We'll do that during the market update though. NDX rally or retracement. Quick take here. Still stable. We're definitely a lot stable here, unless we kind of come down and fill this massive gap right here. Then we could see a 15,300 retest. The S&P doesn't quite have much of a gap, but we'll see. We'll see where we end up. Singapore has no capital gains tax. Yes, Nicholas. That's I know it's great. It's awesome if you are someone who's trading from Singapore. Absolutely incredible. But Palantir are definitely pushing higher. Tesla's starting to pull back a little bit. Let's take a look at NIO. NIO is up over 1.6, back over to 38.50, so trading just worth $39. And Amazon. pulling back a little bit, down about 20 basis points, just struggling at 3,500. Let's take a look at SOS very quickly. Still consolidating sideways. This is a stock that I haven't really done any research on. 477 million. It's a very small cap company, so it's been selling off from February highs. It's down a little bit over 84%. Support level, I'd actually go ahead and mark this level as a support for the company. There goes the power. But this right here, 247, 250 is going to be that support level to watch for SOS. Right, so that is going to be the level to watch. And resistance stays put at 450 for this company. Right there. So still consolidating sideways, right, and returning below the moving averages. All three moving averages returning below. So it's a kind of like a bearish pattern, but it really depends on where the valuation is, what the fundamentals look like for the company. If you are looking to trade this, and even right now, it's running at almost 34 times earnings, which is just reasonable, but it's not undervalued, right? If you're looking at undervalued companies, if you want to buy something that's undervalued, you want the PE to be lower than the market. You want the PE to be lower than its peers, so that you can actually get the profitability that it comes with once the price to earnings starts expanding. Take-Two really selling off today, down over 2.3%, down to 152.22. Definitely coming down to our sweet spot. So maybe I'll pull the trigger today. We'll see. So what is your general opinion about companies raising more cash through stock offerings? That's a great question. So there's only two ways companies can raise capital, right? Either through debt or through equity. You have to really differentiate between companies that are in the different industries, right? Of course, a lot of the auto manufacturers, a lot of industrial companies, a lot of engineering companies, manufacturing like divisions that need a lot of capital expenditures, property, plant, equipment, big buildings, big things in terms of equipment. They're going to be the ones that are going to be able to, of course, get a lot of debt because they're doing it against collateral, against an asset. So that's that. But at the same time, they also have big expenses. So I just need the company to find the right balance between the two, right? The equity offerings is not a big deal if they are doing it at a moderate pace and they're not over diluting the shareholders, because that, of course, is a huge turnoff. It's a big part of our check marks, like 14, 16 check marks that we look at. We want companies that are low dilution. But you can also look at it from a case-by-case basis, right? What is the actual need for that cash and where is it going to? Is that going to lead to some more growth opportunities, some more acquisitions? What is that cash going to do? Because with debt, you're paying an interest. That's a burden on cash. But with stock offerings and issuance, you're diluting the shareholders. So even if the market basically doubles, and I've mentioned this before, if the market goes from, let's say, 50 billion to 100 billion, that's a 100% gain. But if they diluted the shareholders along the way, that gain could be absolutely zero if they diluted all the shareholders throughout that time, right? So we want to be very careful. Instead, I strongly prefer companies that are buying back their own shares. Vertex is a great example. AMD is a great example. Amazon has been very stable. Apple has done a lot of share buybacks. So those are great companies that are doing share buybacks. But you have to take it by case basis. With Tesla, with the NIO, they've got huge capital expenditures. With the factory build outs, infrastructure, different production deliveries. So I understand where they're coming from, but I just don't want to see this being a trend in the future where they're just consistently doing it. That to me would be like a red flag for a company. All right, so where are you in India? Which part? I'm in Noida, so it's like a small town outside of New Delhi. City. Well, I should call it a city. All right, so Max has pulled that trigger. We'll definitely do that. So we'll keep a close eye at Take-Two Interactive here. It's kind of stabilizing here on the day. So NIO is pushing up over 2% now. Palantir is also up over 1.2. Tesla kind of stabilized. And then let's just take a quick look on the broader markets and see how every stock is doing on the day. So we got Peloton back up to $112, up over 4%. AMC is over $50, almost at 51 here, up over 4.8, almost 5%. We got Micron. That's up over 3% on the day, so pushing higher up to $75. That's good. Qualcomm up, NIO, Nvidia, they're also up. Nvidia's up over 1.8% again, almost at 226. Baba up over 2%. Trade Desk up over 1.7. Zoom $302. Really? No way. Up over 2%. So it's really starting to push higher here for Zoom. So it's got a massive gap here, So we'll see if that kind of fills in. RGL Vertex support is 186. So 186 is going to be the level. Mohammed, I haven't bought Baba yet. What about Take-Two Interactive? We've gone over Take-Two Interactive, but just for the sake of this very quick technical analysis, 151 is going to be that next level to watch. Usually what happens is like after the live streams, the prices move up so much, I end up paying a premium from the low for the day, and that's probably what's going to happen for Take-Two as well. We were down to 152. We're almost back up to 154. So we'll see. We'll see if the buyers stay up there and if the 151, 152 support kind of stays up there. But after the live stream ends, I may end up buying some shares here for Take-Two. We'll see. All right. So going back to our watch list here. So that's that. And then we got Snapchat up. Upwork is up another 78 basis points. Not a big deal. DraftKings almost at our $65 level. So $65 resistance. It's like it's just teasing us with that resistance right there. The last 3 days we're just shy of 65. 64.50 here, 64.50 here, 64.47 today. We're just like 50 cents away from that level. So I do expect a breakout over $65. Well, let me rephrase. I do expect a retest of $65, and then a breakout is going to depend on the volume. And the volume has been kind of slowing down. But I do expect a retest of $65 for DraftKings. AMD up over 0.5%, just under $107. Nothing crazy. Let's see which ones are actually red. So Novavax, Clover Health, Mara is down. That's very normal because Bitcoin prices are pulling back. Upstart is down over 1%. What a surprise! Never thought I'd see a day like this when Upstart is red, down over 1.5% at 285. This stock, I tell you, it's just been absolutely crazy. EMC running 51 up to 2 point. All right, that's perfect. EMC up to 51. Let's take a look at Boeing here very quickly. So EMC almost at $51. Boeing here, so 210 is that support, the 300 SMA. We kind of got that tested yesterday. So yesterday's low was $210.72, almost 10 cents shy of that support. The day before that, $210.51. We were like plus minus 10 cents for the last couple of days in terms of support. So 300 SMA, 210, I think this is a very decent support for Boeing. And again, this sell-off has been largely because of their Rayner order getting canceled. So I think there were like 10 aircrafts for the 737 MAX that they were buying, which they canceled because of pricing issues. So I think 210 is going to be kind of like a fair valuation for the company, and it's also a support level. In terms of upside, it largely depends on the economy and the reopening, right? Because right now, a lot of the airplanes, the demand for aircrafts is not quite there because airlines and travel is not fully recovered. So I think that's the biggest question, because commercial is a big piece of their business. Government also makes up majority of their revenue, but commercial is where they make a lot of the money with the airlines. So that needs to happen in order for us to see a potential retest back up to where it was. We're talking $385, $400 plus levels for Boeing, but now it's just starting to consolidate sideways, because I think based on the current travel demand, I think this is more like a fair valuation for Boeing. If that travel demand recovers, then yes, I could see a breakout back up to $300 plus for this company. But in the near term, short term, 210 is going to be that next support level to watch. All right, let's take a look at C Limited. C Limited, I know it was selling off a couple of days ago. Today it's up over 2%. $314. This right here is a support level to keep in mind for the company near term. Yesterday low was $317. Not quite the low, but it's still kind of testing that support. So it's still trading in a higher high and higher low pattern. So we're still making this uptrending channel. We're still in the context of a bullish pattern, but it has recently been pulling back. So $314 next support. All the way as low as 253. I think this right here is going to be a much stronger level of demand, kind of aligned with that 200 SMA. We previously validated that 200 SMA here, so perfect validation of that 200 simple moving average. So I think that is going to be a very strong support. And again, C Limited, you compare this with InMode. These are the type of companies. If you want your account to grow, these are the types of companies in terms of chart patterns that you want to be invested in. Why? Because just take a look at this pattern. I mean, it's beautiful, right? It's just consistently higher highs and higher lows. That's all it is. It's just pushing higher and higher. No there's been volatility. So there, C Limited was down a little bit over 34% right here. That makes sense because the Nasdaq and the S&P were down over 10% each. Not the S&P, but the Nasdaq. But this right here was a 30% pullback, but a strong recovery, right? Pushing higher. All right, so let's see. There we go. Starting to fill that gap. So thank you so much for mentioning that tab. SPY is down to just being up over 18 basis points, but still up over 4,500. So we got that initial pump in the first 5 minutes and then potential back down. This right here is Dow Jones, now up over 20 points. This is crazy. It was up over 170 points. In the last 20 minutes, we have dropped a little bit over 164 points for the Dow. Incredible. And the Nasdaq is also pulling back down about 12 basis points from the highs. Still up. This is surprising. Still up over 0.5% for the Nasdaq. The S&P is only up over 19, and the Dow Jones pretty much flat on the day. But the Nasdaq is still up over 0.5%. So definitely a strong move for the Nasdaq index here. Ethereum continues to pull back here. Have you looked at Mongodb as a tech stock gapped up after earnings? The application software industry is huge. It got at 250, but sold way too early at 350. So let's take a look. Mongo. All right here. So huge gap up. I'm assuming that on earnings, rallied 26%, now almost at $500. Glenn, you had it at 255. That was like a really solid entry. We're looking like right here. That's like almost 100% gain. That's incredible. But yeah, strong uptrend. Looks like it's been on a consistent uptrend here. Let me just check out the revenues very quick. So not generating a profit yet. 42 times sales. For tech companies, I get excited, but then 42 times sales and of course earnings when they're super high, and the balance sheet does not look great. So it's decent. I mean, cash 1.8 billion, 1.2 billion in debt. Take a look at the cash flows here. Negative free cash flows. Total shares outstanding 50 to 60 million in the last 4 years, which is not bad. So not a lot of dilution, but the valuation is high for this company. Let's take a look at Zillow. So Zillow is still trending down. It's still making these lower highs and lower lows. It's a very clear pattern. So too expensive, but excellent company for the long term. Yet expensive, a little bit. Just based on the price to sales, it's a bit overvalued there. But yeah, this right here, lower highs and lower lows, trading below 50 EMA, $103 is that next resistance. $85 is going to be that next support level to keep in mind for Zillow right now. And it's kind of very similar to Redfin and Open Door and Zillow as well. All these companies that kind of do really well in a booming housing market. We've already seen that in the past, but now the construction kind of slowing down for new homes. The material costs are through the roof. Construction workers we've seen already kind of like, though in that sector there's been more layoffs and additions of new workers and new jobs. People taking the summer off. There's been lower volume transaction, and as a result, there's less traffic for a lot of these companies as well. So I think that's a very important sort of analysis that we need to do, and where that housing market is going to go in the future. P ratio is often used. In what cases do you accept higher P, and when do you see it as something bad? Really depends on the growth. Really depends on EPS growth for the future, and also depends on the industry, right? So tech, information services, information technology has usually traded at a premium of a price to earnings because their growth has been substantially higher, whereas something that you're looking at, other sectors like materials, industrials, real estate, they're trading at a much lower PE. Even financials, they're traded at a much lower PE. So it really depends on different things like industry, right? Which industry stock is that belongs to, and of course the growth rates, right? If there's a higher growth rate, then the company can be expected, it can be reasonable to pay a little bit more for the earnings for that company because they're expected to grow at a much higher clip than some of the other ones out there. So that's that. Walgreens, is it down? Let's go. It's down about 80 basis points. So coming down to that 50 EMA, 48.50 is going to be that next support level to watch. And if it does come down, I will be adding more here at close to 48.50. But this right here has been a strong ascending pattern, right? Making higher highs and higher lows. And this right here is just going to be that uptrending channel. So we're just getting tagged. We did breach a little bit on, so what is this? What was this day? Right there, it was September 2nd. So we did breach that higher high before pulling back. So those moving averages, I think those are going to be the next support levels to keep in mind in the medium term, all the way as low as 48.50 for Walgreens, all the way down to this higher low. Let's take a quick look on Visa, see how that stock is doing. Down about 33 basis points. It's had a reasonable push higher from lows of that 200 SMA. Jumped over 3%, and now we're starting to come back down. Today we trade as 230, so strong momentum to the downside here. This is considering probably because the markets are starting to pull back here. But that 200 SMA, all it was that 220 level is going to be that next support level I'm watching for Visa. All right, so TIGR. Let's take a quick look on Tiger. So it's up over 14%. Strong breakout over 1380. This right here is the level. Previous support. We did kind of breach all the way down here for a couple days. So all the way down here, close to 1270 levels. And now we're starting to push higher. So that's good. Next resistance to keep in mind for the company is going to be that 50 EMA sitting roughly at $16.50. Right? So 1650 is going to be that next resistance to watch all the way as high as potentially this $19 level. So that right there is going to be that next level. First one is going to be that 50 EMA to watch, 1650. We could very well see that retest today based on the momentum and the volume. We're already surpassing the average 10-day volume, and it's not even 30 minutes into the trading session, right? So 9 million shares traded versus 8.3 million. That's the average 10 days. So that's a strong move to the upside for TIGR. All right, let's take a quick look here. Palantir, look at Palantir go back up over 2668, up another 2% on the day here. Take-Two Interactive just down about 2.6, still hovering under 156-ish, 152 levels. We got Neo just over 2%, Tesla also pulling back a little bit. Big drop on ETFs. Which ETFs are you talking about, Ranjit? Amazon, probably Amazon is selling off, right? 3,500 was the resistance. Oh, look at that. We're just hovering around that level, so we're up over 0.5%. So yeah, 3,500. We're just like trading at that level. 3,773 is the all-time high for this. So announcing new mobile air taxis that will be used for commercial driverless ride services in Tel Aviv and Munich starting in 2022. Thank you so much for mentioning that. That's thanks. We didn't have the catalyst on there on the news section, but that's a really strong catalyst there for Intel. So thank you for mentioning it. All right, let's take a look at CYTH. I've never really looked into this company. So Cyclo Therapeutics, $7.33, 45 million. I mean, this is a way too small cap. I mean, this is like a micro cap company. 45 million market cap. Like, this is really, really small in the grand scheme of things. Revenues flat, net losses growing like crazy. So plentiful cash with absolutely no debt. So it's kind of a tough one. It really depends on what because I haven't done any research in this company. Like, I haven't looked into the fundamentals, but the support level is going to be at $6.33, and it kind of is forming this lower highs, kind of like a descending triangle, so to speak. So lower highs being formed with a horizontal support roughly at 632. So I would let this stock kind of fill this channel in, and then see where it goes from there. Ideally, I mean, this is a descending triangle. These usually do break to the downside, but I haven't looked into the fundamentals yet. So all right, let's see. So the yields, 10-year yields are up over 2% to 1.32. So that's strong, right? That's good for the yields, pushing higher, 1.3%. Your stream keeps me interested in the market. Kind of a ritual watching open with you after my workout. I appreciate your hard work. Dutch Cuts 104, thank you so much. I really, really appreciate it. And I'm glad that this is very, very interesting. Thank you. Let's take a look at BYND, Beyond Meat. So VIX, quick update, Kevin. VIX is down still over 5.7%. We're just kind of back and forth, nothing really going on. 1770 levels, just trading around those levels. So BYND, Vertex 186. Vertex really getting that selling pressure down, right? Down to that 186 support level. So that right there is going to be that level to watch for Vertex moving forward. And yeah, this is going to be on my watch list to create those alerts. See where we go from here. And the support level next is going to be down all the way down to 164. Right, so that is going to be that next support level to keep in mind. It's just been a really downtrending pattern, right? It's just been making lower highs, lower lows since like the beginning of July 2020, since almost a year, more than a year. It's been selling off, right? So 40%, almost a 40% drop here from all-time highs. And if you come over to the monthly chart, and I'll kind of go back to whatever we were looking at earlier, which was BYND. But you'll notice that on the monthly chart, it has breached that 50 EMA a couple times in the past. This right here was a perfect breach. This right here we sold off. So, sell off of 68%. So back in 06, 07, this is because of the global recession, because of the financial crisis. This right here, back in 2015, we dropped a little bit over 51%, right? Breaching over that 50 EMA. And right now we're seeing almost an identical pattern play out. So I wouldn't be surprised to see some more downside here, potentially maybe to 160s, 165. And that is going to put us to 160. It's going to be about 50% drop from all-time highs. It's good that we didn't buy like when it was at over $200, $250. It's undervalued from a price to earnings, price to sales ratios. All right, so moving back to BYND, Beyond Meat. So Beyond Meat has just been a lot of consolidation here. $116. We're like literally at that level. 115 is a support on the weekly chart, and $200 the next resistance. So we're just trading sideways, and this has been the pattern since June 2020, even going back further since 2019. We've just been in that range. Kind of reminds me of Netflix, where we have a couple breakdowns here, a couple breakouts here, but for the most part we've just been kind of in that range. So 116 is going to be that support. Maybe we can bring this down a notch to like 115ish levels, considering this previous weeks on November 9th, 2020, January 11th. So 115 is going to be that support all the way as low as $100 for this company. All right, so SPY and QQQ Dow Jones are dropping. So there we go. Look at that. The NASDAQ pulling back here. Man, AA.XS. You were asking some of the so intelligent questions. You're asking some of the best questions right now. I've answered 3 questions, and all of them have been absolutely great questions. So do you think the market, do you think the ways we value the market is changing? I mean, some companies are doing abstract new things. How do you price AI, for example? Again, great question. And that's the type of conversations we need to have to really understand what the future is going to look like, because those are the things that are really affecting the markets right now. But I do think the market, in terms of valuation-wise, has changed. And I think ARK Invest has been the biggest driver of that. And because of this thematic investing and investing in themes as opposed to individual companies or like different sectors, I think has really brought on this new valuation metric that doesn't quite fit with the traditional model, which is like looking at value investing. You look at all the price to earnings, price to sales, price to cash flow, like all these different metrics. With thematic investing, when you're investing in a whole theme, it's like something totally different. Right, you're looking at growth, right? You're looking at what the future is going to look like. So, and sometimes you end up overpaying for a stock. Sometimes you end up underpaying. Very rarely do you underpay for a stock in that sector. Most of the time, it's like companies that are trading at very rich valuations, you end up overpaying for. But the growth is still there, right? Growth is significant, and they're so-called quote-unquote disruptors. Which they obviously have a whole model for on how to identify, how to analyze. They've got a whole team behind it. But I think the value side will always be there. I think that's not going to change. I think the key to that, to understanding valuations, will always be there. Those metrics are created for a reason. They're there for us to look at the NASDAQ. Just continues to slide here. They're there for us to value something, right? And it's all relative. It's all relative, right? For me, 20 price to earnings may be reasonable. For someone, 20 may be too high, 20 may be too low, right? It's the same as like buying a house or buying a car or buying a painting, right? It's all about value perception, and what may be undervalued for me may not be undervalued for you, or fairly valued for you. So it's all about where you see that company or that asset to be worth at. So I think that's kind of like my 2 cents. And again, it is going to change in my future, but the valuations are always going to make sense, and they're always going to be the same metrics that we look at when we try to value something. But the market's really pulling back here. All right, let's take a look at Chewy. So Chewy has been on a sell-off here recently, but it's now starting to bounce back. It's up over 1%. So $76 is kind of like that support that we talked about. I think this was over the weekend. Part vegan video, so I think we covered it. But $76 is that support level that we're watching. right? That is going to be that next support, and we've got a huge gap to fill with the RSI kind of rounding out, the MACD rounding out, so it's looking good, and the 300 SMA is right there. So Ranjit, I'm prepared for a drop just like you, Caddy. That's great. That's awesome. That's all we can do, right? We can all be prepared for it. Nobody is predicting anything. Nobody knows when that's going to happen, a crash or a correction. But I can tell you, in our lifetimes, we are going to go through multiple corrections, multiple crashes in the future, right? We are going to go through it. It's just inevitable, but we just need to be prepared for it. But for Chewy, up over 1.2%, $76 is going to be that next support level. And we got a huge gap to fill. The RSI looks good, the MACD looks good as well for this company. So there's a low risk, high reward potential here for Chewy. All right, let's take a look at Square, then we'll go over to CRM. Salesforce, I think, needs more coverage. How many of you guys agree that Salesforce needs more coverage? I will do a better job in kind of covering Salesforce more, but it definitely, in my opinion, needs more coverage. It doesn't get covered often enough. But 242 is the next support I'm watching for Square. Similar to Square and Shopify, these are two companies that, in my opinion, still trade at a pretty rich valuation relative to their peers and relative to the industry as a whole in the tech and the fintech space. But 242 next support all the way down to that 200 SMA sitting roughly 237, and we're now starting to break down below this uptrending channel. So we were forming this higher high and higher lows, and we did start to see that breakdown here further. So 242 is going to be that next support level to keep in mind. All right, let's take a look at Salesforce here. So Salesforce coming down. So this right here was the ascending pattern, or the higher highs and higher lows. So you guys will notice this. And if you extend this further, we were testing that resistance. It was very clear. And if you kind of map this horizontally, this was a perfect resistance level for the stock right there. So once we get an intersection between two resistance levels, this is just a confirmation, right? So you got the higher highs from this ascending pattern, this uptrending pattern, and you got that horizontal resistance from previously. It makes sense why the stock would be down. On top of that, you've got the RSI overbought and the MACD also pushing higher. So it makes sense why we're seeing a little bit of a pullback, right? That 50 EMA and down to that $250, in my opinion, is going to be a very strong support level to keep in mind for Salesforce. So that right there is going to be a very strong support for the company. And if you do see a retest to further lows, the higher lows are going to be sitting right there, and that price point is going to be sitting roughly at around 240. So 240 all the way as high as $250 is going to be that next support level to watch for Salesforce. All right, so I worked for Salesforce and still didn't invest in it. Marwayne, why is that? Would love to get your sort of analysis and research on why you chose not to invest in that company. All right, so Amazon now pulling back. Palantir slightly down here, slightly pulling back here as well. Tesla now flat on the day, with the NEO still pushing higher up over 2.5%. So have you looked into AMGN? Yes. So I think we did some research on AMGN in the past. It's a Dow Jones stock. It's been pulling back quite a bit. Next support I'm watching is at 211 for the company. So AMGN next support is at $211 right there. So previous support that we validated a couple times. So that right there is going to be that next level to watch. Expecting everything to pull back here. So here we go. The NASDAQ. Well, the S&P almost red. The Dow Jones is already down in the red. Let's take a quick look on some of the Dow 30 stocks. Right here. So, all right, UNH down. That's probably dragging the Dow most because it's a $400 stock, right? It's price weighted. The more pricier the stock is than Dow 30, the more it's going to come down. Food is ready. Walgreens is also down, now under $50, down over 1.3%. Not a big influence on the Dow Jones, but still pulling back here. So Peloton has been on fire. Let's take a quick look. And yes, it's been pushing higher a couple of days, right, in a row. So $93, perfect support here, pushing higher, breakout over 1 or 2, and now we're starting to push higher above those moving averages as well. So $127 right there is going to be that next level to watch as a resistance for the company. So that right there is going to be that next resistance. Support is going to be $102 right there. So in my opinion, if this breakout holds up, if the volume kicks in, $128, I wouldn't be surprised for us to see a retest of that level for Peloton. So that is going to be that next level and the next target to watch for the company. So Bitcoin has been selling off. Not sure if there's any news on it, but 42,000. I mean, we're just testing that 50-day SMA. right? So let's see. Not so strong catalyst. But anyway, so we're just testing that 50 SMA line. And as I've mentioned before, if we do see a breakdown below this green rectangle, like there's been buyers stepping in inside this green rectangle. Previous resistance, validated support more recently. But if you do see a pullback here below 42K, right? Then I wouldn't be surprised for us to see a crackdown even further. Then we could be like in the 30s in no time. The next support would be roughly around $37,000. So that will be certain levels of support to watch at 42,000. Ranjit, so dude, I don't know about others, but your live stream makes my mind chill because you take a polar bear with smile. Cheers, but keep it going. Thank you, I really appreciate that. Thanks a lot. So I heard Peloton starting an apparel clothing line. That might be the catalyst. Really? We did some analysis on Peloton. I mentioned like long-term potential-wise, the company is overvalued, but swing trading there is potential. But yeah, based on the fundamentals, it was mostly like, of course, the memberships, the gym equipment, and whatnot. But clothing line, I think, kind of fits with their brand. I think certainly wouldn't be surprising to me if they launch that, and if that's actually true. Let me see if I can find anything on that. September 9th. So right, let's see here. So Peloton. So Peloton Interactive advanced 9.8% after the maker of Interactive Equipment said it launched Peloton Apparel, private label brand. So yes, Mo, you were absolutely right, on point. Thank you so much for mentioning that. So yeah, they are going to be launching an apparel private label brand, and as a result, they're off. That's good because this company already has so much subscribers, so many users that use the product, and to launch that clothing brand, I think that's going to be a great revenue bump, because it's already the ecosystem that they've built, and it's just another revenue stream that they're building on top of what they already offer. So I think that's really good for the company. $120 is going to be that next resistance level to watch. All right, guys. So I'm going to quickly go over the markets here. The Nasdaq still up over 20 basis points, and this right here is going to be. So we're sending those messages. So yeah, Renji, that is true. Those are the members over at YouTube, I think. But yeah, so for the Nasdaq, still up over 20 basis points. We got the S&P up over pretty much flat here, and the Dow slightly pulling back. Bitcoin, Ethereum down on the day still, but those are going to be some support levels to keep in mind. For Bitcoin, 42,000. For Ethereum, it's going to be roughly between $2,800 and $3,000. The VIX has been coming down a little bit, over 3%. But I'll keep you guys updated over at our Discord with market updates and alerts as well. But thank you so much for joining in. I really, really appreciate you guys' support. And again, if you have any questions, just reach out over at our Discord. Of course, comment them down below, and I will make sure to get back to you as soon as possible. So thank you so much for joining in. I really, really appreciate it. Make sure that you drop a like, subscribe if you're new, and I hope you guys have a great, fantastic weekend. And of course, end up the week and the day in a green note, and as well, and finish strong. So thank you so much for watching. I'll see you guys. Happy investing, and I'll take care.